Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. It's a Thursday morning, overnight. A bit of a drift, not very much decisive in terms of price action. I'm Prashant. With me, my colleagues Nigel and Surbhi. Guys, good morning.
Hi, morning, folks. Not too much by way of mega cues, some consolidation on Wall Street as well. But it's a special day for Nigel.
Well, indeed, it's my daughter's birthday. So happy birthday, Nitara. It's a special day for me, my family, and little Nitara as well. But obviously, we've got markets to contend with. And later on in this evening, I'll be trying to make Nitara happy. But hopefully, the bulls are happier by the end of today.
Cherish these birthdays.
Absolutely.
They go by fast. Well, let's just, take it from the top then in terms of where we are. As I said, overnight, it's a bit of a drift. And equities sideways, not very much by way of a cut. S&P down about 0.25%, the Nasdaq down about 1/3%. So, these are not changes which will move, the next morning markets in any decisive way. You had a voting member of the FOMC who delivered some hawkish comments in a Financial Times interview. And that kind of stood out. But the point is that so many people have spoken since the FOMC decision last week. And bulk of it, except Stephen Moran, who's essentially said that, the risk is to not cut. Pretty much everybody else has said that it's not an easy path forward for rate cuts. So to assume that rates are heading lower and it's an easing cycle is not exactly what you should be looking out for. So this was more in line with that. But anyway, the 10-year yield, 4 basis points higher. They were down 2 day before yesterday, up 4, so 4.14% of the 10-year. Dollar index had a bit of a move, about almost 0.6%. We are almost at about 98 on the broader dollar. Oil prices also perked up 2%. So oil's now about $69, so closer to 70 is where we find ourselves at. And there's no new driver in that sense for oil. I've been sort of getting through one or two single stocks out of the overnight markets because they've been so noticeable. So Intel was up 6.5% on reports that it has approached Apple about securing an investment in itself. In the chip maker. So 6.5% pop there. Alibaba 8% higher, and this after the company planned to. That's the number floating up $50 billion or something in terms of AI spending. And there's a company called Lithium Americas, that went up 95%. The stock was up 95% following reports that the US government is considering taking an ownership stake. Now, the only reason I'm mentioning this is because it is, they mine lithium, they mine for lithium. And this is one more step by the US, looks like it's one more step from the US government, direct intervention, taking stakes in companies, to secure critical supply chains. Be it lithium, what happened with Intel, and of course, I think many more are being considered. So I thought I'll just put it out. Well, let's just quickly tie in the levels here. Nifty has seen about 4 days of straight cuts, negative closes. And, we've, by the way, got a negative crossover as well yesterday. We'll see. Not making too much of it for the time being. We ended around the 38.2% retracement level. Support then comes in basically because we've at the 38.2, the 50% retracement and the daily averages. So the zone of support is 24,950. Or 24,940. Basically, that's the zone. 24,950 is the support that one will work with. Resistance is the 40-hourly exponential moving average, which is 25,181. That's a Nifty. The Nifty Bank, it broke the 40-hourly exponential decisively. So here now support is the 50% retracement and the 20-day moving average. Those levels come in at 54,777 and 54,622. If you can have the levels up, they'll come up on your screen. Those are the numbers. So 50% retracement and the 20-day moving average are on your screen. These are supports. Resistance at 55,662 and 55,835. All, as we always do, very, very, very near-term sort of levels that we are working with to look at markets on a daily basis. So GIFT Nifty will give you a quick sense of how we're likely to start, and then we'll pick up the action from there. 30 points lower is where we are at. Nigel is standing by with the F&O picture and how they're looking. Nigel, good morning.
Well, morning. It's a bit of a make or break day for the bulls and for the bears today because the Nifty, it's a very, very crucial juncture. So we'll have to see how things pan out today. But I think today is an important trading session. Now, in yesterday's trade, when you look at the open interest, there was some mild build-up on the Nifty side. But on the Nifty bank, there was some unwinding. So unwinding of positions post the big run is what we saw on the Nifty bank. The other cue is that the Nifty ended lower, yes, but the India VIX cooled off as well. So that's normally an indicator that in the near term, there's no big reason to panic just in the near term. And also we have expiry that will play out next week. So the IVs are lower out there. So that explains why we had the VIX lower with the Nifty lower as well. One problem for the markets in the last few trading sessions are the institutions have been net sellers. So the FI selling has outweighed the DI buying and institutions remain net sellers, which is putting some pressure on the markets and prevent it from moving up as well. Moving to what the FIs did then in the F&O market, well, they added shorts. So shorts are back in vogue. Yesterday, 2 shorts were added for every 1 long position. But as you can see, the short positioning is still at around 85% or thereabouts. Even on stock futures, actually, if you look at the short positioning, that was in the ratio of around 2:1. So there were some shorts that were added into the system. As I normally say, having some shorts in the system, it provides some kind of a breather, or it could give rise to a relief rally. So that's not a very, very negative data point according to me. Moving to the options data then, you have 2 strikes that were active, the 25,100 call. Just take a look at the call writing. These call writers are getting very, very confident right now. Massive open interest build up is what we saw yesterday. And on the downside, you had this 25,000 put. That saw a good amount of open interest build up. The premium is around 60 rupees. So just tying in the levels, going by the options data, the 20 DMA as well as by the options data, this 24,900, 24,950 mark is extremely important. For an adventurous trader, one may want to say they'll put the stop loss at around 24,900 and hope that the markets recover from here on. So that's going to be the important trigger on the downside. On the upside, just going by the options data, that's the resistance zone. But the Nifty bank will have to play its role. Yesterday, it gave it away. And in the last few trading sessions, it's been making lower highs and lower lows. So for today, in fact, if you want to see a bit of a fight back, well, the Nifty bank will have to make its way towards that high that we saw yesterday. So around 55,500, 55,600 becomes an important resistance mark on the Nifty bank. Finally, a stock that I'll be looking at today is Polycab. You pull up the intraday chart yesterday, you'll see that the stock ended virtually at the low point of the day. So there was a bit of a sniff that there could be a large trade. Sometimes post these large trades, you see quite a lot of action. So maybe let's see whether or not the stock recovers. But if you pull up an intraday chart, Polycab promoter taking some mild money off the table. Remember, since listing, the stock is up more than 13 times, but pulling out a piece of the pie that they've created. So I'll keep an eye on the stock post the clearance of this particular large trade.
Okay, all right. So definitely in focus Polycab on that promoter stake sale that's happened. Asian markets quite mixed because the handover from Wall Street was fairly mixed. So you have Japan that's still showing up some gains, but the Hong Kong market is a little quiet, flat. And ditto for mainland China as well. Markets more or less flat. There's some profit taking in South Korea as well. So not too many major moves across Asia. Let's just pull up the GIFT Nifty and the implied open again. Yesterday was another sort of down session. And the indication is that we'll probably start 30 to 40 points lower again this morning. And then we'll pick it up from there. Let's welcome our first guest on the show. Fook Hin Yap, Senior Investment Strategist at Standard Chartered Bank, is with us. Fook, great to have you in. So, we're looking at all of these moving parts and how it's shaping up post the Fed meeting. I was going through some of your notes and you said that incrementally you were getting a little cautious on US equities and, you're willing to perhaps allocate more to Asia ex-Japan equities. Just run us through the thought process there and what is it that's making you cautious on the US market now?
Yeah, no, thanks very much for having me here. And yeah, you're right. I mean, we do have an overweight view on Asia ex-Japan. I think since the middle of the year, we've been talking about positioning for a weak dollar outlook. And in a weak dollar environment, we see that investor flows, they tend to look for better returns in a non-US dollar assets because of the weak dollar environment. And so as they look towards non-US dollar assets, we expect the region to benefit would be Asia ex-Japan. So that is actually one big tailwind. The weak dollar, we believe, will be beneficial for Asia ex-Japan. But look, we're not negative on US equities. We still expect US equities to go up. It's just that we believe there's a bit more tailwind with Asia ex-Japan. Valuations are significantly better there. And you see also policy stimulus as well coming through in China and the AI and technology developments also very much similar to what's happening in the US, but you get it all at a much cheaper valuation. So the US, of course, the story is still very much driven by your earnings growth in the AI investments. We saw that in recent weeks, actually, the backlog is painting a much firmer picture of the future. So there's a bit more certainty in terms of what we're getting in terms of the growth in the next few years. So earnings growth really is driving the US. But also, we were quite cautious with September being a seasonally weak month. And then technically, some indicators are showing to us, just technically, the positioning could be a bit overbought. And so it could be some kind of consolidation or reversal in the US markets.
Hi, Fook. Good to see you, Ben. Fook, you're talking about the dollar weakness and being a little bit positive on emerging markets. Where does India fit in? I was looking at a couple of data points. India's valuation premium, in comparison to developed markets, has come back down to the averages, around 10% ballpark. And our valuations as a premium in comparison to the MSCI emerging market, that as well has come down drastically, and now it's in line with averages. Do you think that from year on, India, after that last year's consolidation, close to 12 months of consolidation is what we have seen while the global markets have been parting, it's time for us to catch up?
Yeah, I mean, you're right. I think we see in the past year that India has given up a lot of its outperformance versus Asia ex-Japan in the past year. And look, I mean, India remains a core holding to us. I mean, within Asia ex-Japan, the region we prefer at the moment is still China, because you're right, the valuation differential has come off, but because China is still at a low valuation, that's where our preference is. The way we're looking at India, I think with the policies at the moment, we saw the recent simplification of the GST ahead of the festive season, which we believe that will be supportive of domestic demand and supportive of consumption. But we're not seeing it in terms of the earnings revision yet. The earnings revision breadth that we look at is still negative. It's very high in terms of the mid-teens earnings growth, but revisions are still being negative. So I think you want to see that turning before we see a bit more interest developing and coming into India. But I think if the setup is positive for the medium term, like I say, valuations have come off, there's policy support coming through, and then positioning, especially foreign investors' positioning, we think is low as well. And again, that could be a positive. When earnings revision picks up and foreign investments come in, we think that will be supportive. But for now, India still remains as a core holding to us within Asia ex-Japan.
Fook, any thoughts on gold?
We like gold. I think that we're going to publish our outlook, in fact, at the end of this week with a new target price for gold. But we do expect gold can go beyond 4,000. I think that's what we've written previously. Look, there's a lot of concerns now with the geopolitics and how that's going to impact the world. I think the headlines come and go. But more than that, I think it's the flows that we're seeing in terms of the central bank flows and then the ETF inflows as well. That is coming into gold. And an environment where real rates are coming down, we think that'll be supportive for gold. So yeah, we are positive gold, something that we definitely keep telling our investors, have some gold in your portfolio to hedge against inflation, to hedge against geopolitical risk.
Okay, all right, Fook, we'll leave it on that note. Thank you very much for joining in. Good to get that perspective from you, and good to know that India remains a core holding for you. That's a view coming in from Fook Heen of Standard Chartered. We will quickly recap, some of the important stocks to watch out for in today's trading action. Plenty of names today on the back of news flow. We'll be looking at names like Glenmark Pharma, Lupin, Ipca Laboratories, Birla Corp, CRISIL, Quality Power, Newgen Software, all on the back of a positive news flow. And then there's Tata Motors, Polycab, Dalmia Bharat, which have some negative sentiment surrounding them. We'll tell you why in just a bit. Okay, so apart from the top 10 list, there's lots of other stuff that's lined up as well. So here's what we have for you. At 8:35, the management of Poly Medicure will be joining in to talk about their latest acquisition of an Italian entity. They've spent about 324 crore rupees on this. At 9 a.m., we'll have Sumit Kumar of JM Financial Institutional Securities for a discussion on real estate stocks. 9:20, Pankaj Murarka of Renaissance Investment Managers is our market master of the day. At 9:35 a.m., the management of Adani Wilmar will join in to discuss the new MOU that the company has signed to lead the National Mustard Model Farm Initiative. After that, we'll be chatting with the management of Happiest Minds Technologies to talk about the impact of the H-1B visa fee hike on the sector and, of course, on their business. And towards the end of the show, on It's the Economy Today, Lata discusses what to expect from the government's second half borrowing calendar with Arup Rakshit of HDFC Bank and Shailendra Jingan of ICICI Bank.
Okay, time to slip into a short break, but we've got a lot of stocks to track for you on the other side. So we'll take that break. The top 10 stocks are waiting for you on the other side of this snappy break.
Welcome back. Well, let's talk about, the cues as they're shaping up. The implied open, as we just saw, was telling us that the start is going to be about 35 to 40 points on the lower side. There is some cautiousness in global markets, including in some of the Asian markets as well. So 40 lower. Let's now straight away dive into the list of top stocks to watch. Our team is standing by with all of the details. Guys, good morning to all of you. So, Darshan, let's start with Tata Motors. Now, this cyber attack, this seems to be costing them quite a bit.
It's a huge impact. So, first, it was about £5 million daily impact. And now there is another impact of almost £2 billion. And the reason, as per the fresh reports that we are getting from news agencies, JLR had failed to have the insurance coverage before the cyber attack. And because of this, company might face £2 billion impact due to this. And earlier to that, BBC had reported that because of the production pause, JLR would be facing the impact of almost £5 million per day. Now, take a look when exactly this cyber attack happened. It happened on August 31. And first statement from the company came on September 2, talking about that, looking into this issue and resolving this. Next update came on September 10, extending the production pause, and the fresh statement came on September 23, in which company is saying that production pause is extended till October 1. But as per reports, production pause may be extended up to November, and that might impact not only Q2 results, but also will have an impact on Q3. Now the interesting part. In FY25, JLR's total profit was £1.8 billion. Now, if we calculate £2 billion plus £5 million per day, total impact would be much more than FY25's profit. Now, why it's important for Tata Motors? Because JLR forms nearly 70% of its consolidated revenue. Now, apart from cyber attack news, there is one news that coming from The Guardian, which says that UK government might look at buying parts from JLR to mitigate the impact of cyber incidents. So we'll have to see how exactly this whole issue pans out. We have reached out to JLR to know the impact.
Okay, all right. Thanks a lot for that, Sud. Well, let's go across to Vivek, who's here to tell us about a large trade that we're expecting on Polycab. Morning, Viv.
Well, good morning. Absolutely right. Our colleague Nimesh hinted to our viewers yesterday that there could be a large trade that could take place as far as Polycab is concerned, and in line with expectations. And also remember, the promoters have been pairing stake even towards the end of June. They did pair close to 2% stake. So what we understand from our sources as well as the term sheet that we accessed last evening is that multiple promoter entities are looking to sell close to 0.8% of the total equity. The offer floor price is at close to 7,300 rupees a share, which implies a 3% discount to yesterday's closing. That takes the total offer size to a little over 880 crore. And also remember, there will be a 90-day lockup on further sale of shares. So there has been a promoter pairing stake happening over the last few quarters as far as Polycab is concerned.
Absolutely. Vivek, thank you very much for that. More pharma companies in focus. Ekta is here with those. Ekta, good morning.
Morning. Well, I'll start with Glenmark, which is in focus. They've signed an exclusive license and collaboration agreement with Hengrui Pharma. And the deal covers basically a type of cancer therapy, which is antibody drug conjugates, which is basically gaining a lot of importance now. So Glenmark has gained the exclusive rights to develop and commercialize this particular molecule worldwide, excluding certain number of geographies, which includes mainland China, Hong Kong, USA, Canada, Europe, Japan, Russia. So So a lot of the countries are in fact excluded from the deal for Glenmark. So it'll be interesting to see which continents or which countries they would be, be able to sort of commercialize in. Glenmark is going to make an upfront payment of $18 million for this, and Hengrui is going to be eligible for milestone payments of up to 1.093 billion. So Glenmark, I expect, should probably be in the green on account of this, but obviously one will have to see the timeline and the commercialization eventually of this particular molecule.
Okay, all right, Ekta, but we're not done with you. You're tracking some more stocks. Ipca and Lupin, tell us more.
Yes, absolutely. So Lupin is in focus because they've received a tentative approval for an HIV drug. Now, the tablet is bioequivalent to a drug by Gilead Life Sciences, and that annual sales is around $16.2 billion. So it is an HIV drug. Generally, such drugs always have large market sizes. So they've received tentative approval. Once they receive final approval, Lupin has said that it will allow them to enter into the lucrative HIV market, and hence we expect the stock to be in the green. Ipca, interestingly, has entered into a tech transfer and joint development agreement with a biosimilar company, Biosimilar Sciences, for the development, manufacture and supply of a biosimilar which is targeting oncology and inflammation from Ipca. So Ipca is going to be transferring their technology to BSS. Now, BSS's campus is in Puerto Rico. Ipca will be receiving defined milestone fees on account of this, as well as royalty on net sales upon commercialization. Interestingly, the press release goes on to say that the company says that capital will now be spent overseas to fund American jobs, infrastructure, as well as IP. So in a way, they are transferring this tech transfer to a company which is based in Puerto Rico, and hence it's going to probably be in line with the localization theme that America is promoting, and Puerto Rico, which is positioning itself as a pharma hub. So interesting news coming in for Ipca. We'll see how the stock reacts at this point, but expect it to probably be in the green.
Okay, all right, got it. Thank you very much for that, Ekta. Nigel, news on Birla Corp and Dalmia Bharat, some regulatory action.
Well, that's right. A mild green for Birla and a mild red for Dalmia Bharat. Let's tell you the news. Birla Corp, they have their arm has emerged as a preferred bidder for the Kanpa Junapani limestone block. That's by the Telangana government. Remember, the company doesn't have a cement plant, by the way, in Telangana. No plans as of now as well. Earlier this week as well, the company was declared as a preferred bidder for the Guda Rampur limestone and manganese block in Telangana itself. But why is it good? Because it secures raw material supply. It's positive in case they want to go for long-term expansion as well. So going with mild green on Birla Corp. Next up, Dalmia Bharat. Well, they have confirmed the attachment of land worth around 377 crores by the ED. Remember, Dalmia Bharat on April 15, 2025 had received a provisional attachment order of around 793 crores by the ED. So going with mild red, Dalmia Bharat is the one, not Dalmia Bharat Sugar. So we'll keep an eye out on that stock as well. Moving back to Vamakshi, she's here to tell us about some other stocks that are in the news. Vama?
Good morning, Nigel. Let me first start off with CRISIL. The company has announced an acquisition. The board has gone ahead and approved the acquisition of 100% equity in McKinsey Price Metrics by one of its arms, which is CRISIL Canada Inc. Now, this acquisition will be done at a consideration of around $38 million, which is approximately 335 crores. And Price Metrics essentially is a leading software solution provider for wealth management firms. Now, if you look at the revenue profile for this particular company, the revenue has grown at a CAGR of almost 8% from 81.5 crores in 2022 to 94.2 crores in 2024. Now they follow a December year ended calendar. Now they've managed to report 21.5 crores of profit in 2024. So therefore, the price to earnings ratio at which this acquisition is happening is at almost 15 times, which is much lower as compared to CRISIL's own around 40 to 50 times price to earnings ratio. Quality Power is the next stock that I'm watching out for, because Meru Electrical, which is a material subsidiary for the company, has signed a technology co-development agreement with Hyosung Group of South Korea, and this is for gas-insulated switchgear instrument transformers, and with that it becomes one of the first Indian companies to co-develop a GIS instrument transformer for global markets. So going with the green for Quality Power. And lastly, keep an eye out on Newgen Software as well, because a couple of order wins for the company. They've received an order worth almost 21 crores from Shemag General Insurance assurance. This is for software license, implementation and annual support services for a period of 5 years. And the other one is one by an wholly owned subsidiary which has executed a master service agreement with a customer for cloud hosting, software license and implementation services, and the aggregate value of this is around 4.22 million euros.
Okay. All right, Vamakshi, got it. Thank you very much for that. So let's quickly recap our list of top stocks to watch. The ones that have positive news flow around them would be Glenmark Pharma, Lupin, Iqbal Laboratories, Birla Corp, Crystal Quality Power and Nugent Software. The ones that have negative news flow would be Tata Motors, Polycab and Dalmia Bharat. Okay, so that's our top 10 list for the morning. Let's now move on. We have Manisha joining in with a roundup of all the commodity market action. Manisha, good morning. So what's the big headline?
Well, while we are looking at some pause in gold and silver prices, what has really run up in the overnight markets has been the copper prices, up by between 4 to 5%. It's trading at a 2-month highs for the spot prices, 15-month highs when you look at the LME 3-month prices there. This is after Freeport McMoran declares force majeure from Grasberg mine in Indonesia. In any case, we are looking at lower supplies in this year. There have been various reports from the beginning of this year on how there is less copper and more demand in sense of energy, defense, AI, energy transition, etc. So these factors really seem to be coming together right now, and a very strong support is what we continue to see in the Asian markets right now as well. The other thing that's doing well is the crude oil prices, nearly 3% of gains overnight. And with that, we are trading at around 7-week highs for the crude oil prices also. This has to do with the decline in U.S. inventories and concerns in sense of supply coming in from Russia, from Kazakhstan, also Turkey. Markets also are looking at Venezuela concerns coming in as Chevron says that it will export only 50% of what it produces in that country. So supply concerns are pushing crude prices also higher today.
Right. Manisha, thank you very much for that. So copper in focus, oil in focus as well. Thanks very much. Well, brokerage calls of the day is what we want to focus on now. Sud sort of goes through a lot which comes in the morning and picks out a few. Sud, good morning.
Good morning, Prashant. So Dixon Tech has got another upgrade from UBS, and that is the UBS's upgrade to buy, call and target has given is of rupees 23,000 per share. It says company is poised for next growth phase via backward integration into non-semiconductor smartphone components like displays, camera modules, enclosures and batteries. And this will expand its margin by 110 basis points by FY28 versus consensus of 40 bips expansion. And also by FY28, it's targeting a revenue of $11 billion. That would be an increase of almost 2.5 times if you compare from the level that company had reported for FY25. Second note is on Piramal Pharma. Incred has initiated coverage with an ad call and target is of rupees 276. It says company has a diversified 3-engine model, that is first CDMO, second CHG and third is PCH. And these three businesses blend high growth outsourcing with steady and defensive cash flow, and also differentiation comes from end-to-end CDMO depth in complex modalities, and CHG is a cash-rich and defensible franchise. That also will be positive for Piramal Pharma.
Okay, all right, got that. Thanks very much, Sud. So we'll keep all of those stocks on our radar as well. We have to take a very quick break on that note. We'll come back on the other side. We will be connecting with, of course, Deepan Mehta, discuss some of these stocks and some more fundamental ideas. Also, the management of Poly Medicure is going to join in to talk about their recent acquisition. Welcome back. Well, let's get to, big conversation. NSE's MD and CEO Ashish Kumar Chauhan has said that SEBI will consider stakeholder views before any move on curbing weekly expiries. He was speaking on the NSE's long-awaited listing as well. Our colleague Abhimanyu asked him whether the NOC was expected from the market regulator SEBI soon, and this is what he had to say.
We have been discussing with SEBI, and we had filed our application for settlement in June 2025, and we are awaiting the NOC. Once the NOC comes, as you know, it will take 4-5 months to prepare the RHP, and then another 4-5 months for SEBI to clear the RHP. So somewhere 8-9 months after the NOC is when the IPO can happen.
So there has been a buzz around curbing of weekly expiries and shift towards longer expiries like fortnightly and monthly. How is this likely to go through? Have you heard anything from the regulator in this regard?
No, we have not had discussions. What we have heard from the public pronouncements is that SEBI will come out with consultative papers, and all the participants' views will be taken into account by SEBI before taking any action.
Sir, if this goes through, what is going to be the expected impact on business? Could there be any meaningful reduction in volume?
Naturally, in the initial phases, that could be, but over a period, things basically come down to normal, and it remains to be seen how overall what kind of final outcomes are there of the consultative paper.
So there's a buzz around the same-day expiry for BSE and NSE. Could that be a part of the negative from the discontinuation of weekly expiry set-off?
In a way, it was always there. A common settlement was always there for more than 25 years now. Only in last few years there have been some changes. But overall, again, it's up to the regulator of what they want to do, and then we'll have to all obey the regulatory framework.
Well, that's Ashish Kumar Chauhan, Managing Director, CEO, NSE. A bunch of issues really there. We have Deepan Mehta, Director at Elixir Equities, with us. Deepan, good morning. Great to have you with us here. Thanks very much for your time. As an NSE shareholder, feeling better? Feeling good? Deepan?
I don't. Good morning, Prashant. I don't have any NSE.
You don't have NSE. I just assumed.
I had BSE Limited shares, which I sold very early. And that'll be one of the regrets of my life, because that has gone up 50-fold from the time I think I sold it back, I think about 15 years ago. So, but no, I think that certainly NSE is a great company. And there are medium-term challenges like this options volume, and also the IPO, and you could expect selling post IPO because a lot of stock is there with a lot of outside investors as well. But it's a great long-term story, 10-15 years or so, we're going to have a great capital market over here. Cash market volumes are growing, and certainly that will ensure that the company continues to prosper. So very positive on NSE per se, but there could be challenges in the short to medium term.
I just want to make, Deepan, just coming to you, let's pull up BSE share price. So we had reported sometime back, our colleague Yash has, of course, been on top of the story. We had reported sometime back that there's weekly options. The consultation paper on longer tenure derivatives is, the SEBI is going to come out with a consultation paper. I think we report, this is about 3 weeks ago, we'd reported. And we also at that point said that the consultation with, intermediaries, large brokers, etc., is going to start as part of it. Yesterday, our sister net channel CNBC Awaz reported that that consultation process has indeed started with exchanges. And I think towards the end, as they put that story out, the stock did see, that is BSE, not PB Fintech, BSE actually did see a bit of a fall. Just wanted to make that mention. I mean, we'd reported that this is happening, and SEBI chairman is on record, of course, saying that we're looking at longer tenure derivatives, maybe a move away from some of the weekly stuff. So we'll see. Nothing is decided as of yet, all in the area of proposals. One more area of proposal, of course, is in the case of insurance. And this is, again, a question for you, Deepan. Yash reported on insurance yesterday. He said essentially IRDAI is once again talking about bringing down commission costs, distribution costs, etc. I mean, the experiment of Bima Sugam presumably has not really gone anywhere. We got a new man at the helm at IRDAI as well. And the interesting bit was that insurers basically told IRDAI that why not consider a mutual fund total expense ratio type model to do this. And they're going to come up with a proposal, etc. Again, PB Fintech sold off at one point sharply, some 6-7% yesterday, and recovered. Your thoughts, Deepan? PB Fintech?
Yeah, I think that certainly is a threat for a company like PB Fintech, which derives a large portion of its revenues from selling insurance policies. But I'm sure they have other plans as well to counter that thing. But on the whole, I think if they go to a fixed commission model, the way mutual funds have gone, it'll be very positive for the insurance companies. I think, look, from the consumer side, the commissions are really quite exorbitant for the kind of service that the agents are offering. So it's a good move in the right direction. and will go towards improving their operating profit margins as well. But look, end of the day, Prashant, insurance is very, very heavily regulated, and there's hardly any scope for innovation. And if you see the growth rates, they are all middling. I mean, all more or less in the average range for all the companies. And private insurance companies have been listed for last, I think, almost 15 years or so. But it's not that they have really outperformed the sensex nifty by a huge margin. So I'm not so sure from a long-term investment perspective, they are great stocks to invest in. Any case, valuations also are quite reasonable. And last but not the least, they are highly complicated to understand, analyze, and forecast. So, very few people understand the valuation and all the other metrics which come into play.
Okay, all right, Deepan, request you to stay with us. Polymedicure, that's the stock in focus. They're looking to acquire Italian-based Medistream for around 324 crore rupees. Mr. Himanshu Baid, the managing director of Polymedicure, joins us on the show. Well, good to have you on the show, Mr. Baid. For the last many months, you were teasing us about acquisitions, and now you're making the step in those directions. So I'm going to come back to you. For the time being, just highlighting the 3 broad points that we want to focus on. The opportunity for them with this new acquisition, the impact of the GST rate rationalization, as well as what's the impact of tariffs, and finally, the outlook for their international business. Well, Mr. Baid, always good having you on the show. Tell us something about this newly acquired company. What's the scalability of this Italian company? I believe in the last year, it did around 17 million euros, with margins in that vicinity of around 17 to around 18%. Growth trajectory, and do you think the margins can come at par with what you're doing right now in the core business?
Good morning, Nigel. Thank you. I think, we have been working on a couple of acquisitions. So one we announced earlier in the month was Pendracare in cardiology space in Netherlands. And this is the second one, Medistream, which is a company based out of Switzerland, but manufacturing in Italy. And the most important thing with this company is they've got a long track record in the trauma and extremity space. And that market is close to around $16 to $18 billion. And majority of the market is in the US, actually almost 60%. And this company has got a FDA-approved product line. They already have a small base in the US. So this gives us an opportunity to expand into the US market with expanding their network. And also they have a direct sales force in US, Mexico, and Italy. So I think that also gives us some strength to deepen that manufacturing base there, and also leverage India in terms of cost reduction in different areas. And if you can leverage that, I think that will help us to grow this business. And I think the plan is to double in next 5 years.
Double the revenue in the next 5 years. All right. So it'll be approximately 35 million euros. With regard to that point on US, how big can the US market become for you in terms of revenues? Say as of now, what is it and where is it headed? Point number 1. Point number 2 is you're sitting on a good amount of cash. Post this acquisition, what does the cash come down to? So on both those 2 points, US market and funding.
See, the US market, I think currently is around 3.5, 4 million. And I think the plan is to, almost take it to around 15 to 20 million by 2030. And, definitely we need to do some homework there and, increase our distribution network there. But that's the possibility from the current scenario. Though it's too early to predict, but that's what we think right now. On the cash front, I think we have used close to around 450 crores of cash in both the acquisitions. And we still have around close to 750 crores cash. Partially is going to be used for expansion in India. And that's going on, as part of the QIP proceeds. And I think balance will be used, as and when required.
Himanshu, hi, good morning. And good to see you build out various legs of this business, right? And it's such a big field, medical equipment and...
Yeah.
So good to see that. Just a quick point. I know I've asked you this before. I think exports to the US is very minuscule for you, value-wise, etc.
Yeah.
This company that you've acquired, does it have, you said they have distribution and sales force in the US. Do they have manufacturing in the US as well?
No, not manufacturing. Manufacturing is in Italy right now. But, now if you see our 3 European operations, all the 3 companies which are manufacturing in Europe have US FDA approvals. So that gives us this kind of a entry into the US market, with 3 companies. And of course, with India operations also focusing on the US. So I think we want to build up a substantial business in the US in next coming 4-5 years.
Okay. Now, this may be transient and who knows, right? I mean, the world is in a bit of a flux, but a bit about revenues doubling in the next 5 years for this company. How much of that is contingent on US sales? Because just as we speak, I mean, I saw this a couple of hours ago, that US is considering tariffs on import of medical equipment from outside. As I began by prefacing my question, who knows? And how long this will stay, whether this will happen or not. But any thoughts?
So I think US already has tariffs on Indian products and Chinese and a lot of other countries. So medical devices are not exempted and equipments are not exempted as of now. So like pharma, we are not exempted. So we still pay tariffs, whatever products are going in the US. So, but being in Europe, I think that gives us a faster entry into the into the US market. And US market, let's say you asked about what could be the US market share. It could be around 40 to 50% going forward in the next 5 years.
Okay, all right. Final question then with regard to the GST, GST 2.0. It's been rationalized. How do you read it for your business? And also just revise the guidance for the company on the whole, domestic and international market as well. Q1 was a little bit softer, so I ask you.
So I think on the GST front, I think it's a great move by the government of India. I think that reduces the cost for the patients overall. From 18%, 12%, we have dropped to 5%. And I think healthcare now gets more affordable, and that will drive consumption of medical equipment and devices because they become more and more affordable. Healthcare costs will definitely go down. So that's a huge impact. And of course, it will be very hard to say what will be the real impact in the current financial year. But I think we still, stay with the guidance of 30% for domestic market growth this year. Export markets, again, little choppy, but still, between 5 to 10%.
Is Chinese dumping a problem here in India?
It is a major problem. It's a major problem.
Okay. How big a problem?
I think, wherever we have seen PLI being offered in India, I think Chinese have been dumping the product in every sector. And I think I was talking to some of senior government officials, and they've probably mapped it that out of the 14, 15 sectors where we have PLI, Chinese have actually, dumped prices in around 12 to 13 sectors.
Wow.
That's a big issue right now, I think.
Wow. So I mean, your products are having to compete with the products here from China. Obviously, price points there are much lower.
Yeah, they are lower, and I think, we have given an easy entry to Chinese products in India. Whereas, when we want to sell in China, it would take 3 to 4 years to register a product. Whereas in India, it's much easier for them to register products and sell in India. So, and also they don't have, transfer pricing issue. They don't take care of anything. So all that actually, push manufacturing back in India to a certain extent. But I think it's a matter of time where I think we will get out of this, and I think we'll become more resilient.
Okay. Hope so. I mean, maybe the government has to do something. Maybe the industry with scale becomes more competitive. I mean, it has to be a mix.
There is a lot happening at the government level also. You've seen GST reforms and other stuff. So I think we are very positive on this.
Absolutely, sir. It's an industry where I think why shouldn't Indian companies like you have more share and reduce import dependency in a big way. Thank you very much, and good luck to you as you execute. Appreciate it. We'll take a quick commercial break here. We're going to focus on the big movers on the Lal Street from yesterday. The big stocks, basically, price action, and of course, what was behind the price action, delivery stats, and so on and so forth. Coming up.
Welcome back. You're tuned in to Bazaar Morning Call. Well, it's that time of the show when Horribles joins in to tell us about all the big movers yesterday, the large volumes, as well as delivery-based buying or selling. Harmas, take it away.
Good morning, Nigel. And the one common theme that has been dominating proceedings over the last 2 days has been the auto ancillary names. We spoke about it in closing as well yesterday. And take a look at the volumes at which they traded. In yesterday's trading session, Munjal Auto was up 15%. Minda Corp was up around 10% as well after the vision document they unveiled. Lumax Auto, another day of 7.5% gains in yesterday's session. But take a look at the volumes here. Munjal Auto, over 1.5 crore shares being traded. Minda Corp, 2.5 crore shares being traded, significantly above their 20-day average, which stands at around 5 lakh and 3 lakh shares respectively. Same is the case for Lumax Auto as well. But when you take a look at the delivery stats, well, considering the sheer amount of shares that were traded, the delivery stats don't match up to it. And the Munjal Auto, 18 lakh shares traded compared to 1.5 crore that were traded yesterday. Of course, they're significantly higher than their 20-day average nonetheless. But Minda Corp as well, 19 lakh shares marked for delivery compared to 2.5 lakh shares traded. And Lumax Auto as well. That was slightly better with 4 lakh shares marked for delivery compared to 13 lakh shares being traded. PSU banks have been another dominant theme over the last few trading sessions. Most of those banks hit a 52-week high in intraday trade yesterday. Indian Bank was one such name, and the volumes on Wednesday were the highest in the last 3 months. 55 lakh shares were traded in yesterday's trading session. 20-day average is around 11.5 lakh, and out of which 23 lakh shares were marked for delivery. And here too, the 20-day average is around 6 lakhs, so around 4x of the 20-day average was marked for delivery yesterday for Indian Bank. There are reports that are also suggesting that it could be a potential MSCI inclusion if at all the foreign shareholding limit for FIIs is raised. And Motilal Oswal today has also called it one of its top PSU banking picks as well. And lastly, Zuari Industries, another 20% circuit yesterday. The stock was up 10% the day before, and the volumes were the highest on record. Close to 60 lakh shares were traded in yesterday's trading session. The 20-day average here is only 3 lakh shares, and out of which close to 10 lakh shares were marked for delivery. Here the 20-day average is only 74,000 shares. Now the stock has turned positive on a year-to-date basis, and since the start of 2020 the stock has gone up almost 8x.
Okay, and who says this is a flat market, right? Look at the names on Hormaz's list. Big movers and shakers. Thanks for that, Hormaz. But let's revisit Tata Motors and bring Sudarshan back in. We told you earlier that the stock is going to be in focus because this JLR, hit is pretty big. You'd think a cyber attack, maybe a couple million here, there, a couple of days of outage, but this is looking a lot bigger than that, no, Sud?
That's correct. So reports suggest that because JLR had failed to have the insurance coverage ahead of cyber attack, and that may impact, and total impact can be of £2 billion because of no insurance coverage. And apart from this, earlier BBC had reported that because of the production pause, daily impact for JLR was £5 million per day that company has been facing. So if you take a look at the timeline of cyber attack, so it had happened on August 31st, and first statement from the company had come on September 2, saying that it's looking to the issue and looking at restarting the production very soon. But the latest statement that company had released on September 23, in which it mentioned that production pause extended till October 1, and it has also mentioned that it will be looking to restart the production in a phased manner. But here also reports suggest that production pause may be extended till November, and if that happens, it will not only have an impact on Q2 earnings, but also will have an impact on Q3 earnings. Now, why this is very important for Tata Motors? Because you know that JLR forms nearly 70% of Tata Motors' consolidated revenue. Now, apart from this news and the impact, there is another news, that a report coming out from Guardian. It says that UK government is looking at multiple options to resolve this issue, and one of those options is that UK government may buy parts from JLR suppliers, and once JLR resumes the production, again UK government will sell them back. So just UK government is looking to support the JLR at this point, but we'll have to see how this whole issue pans out. But at this point, it's a huge impact that we can say.
So 30 seconds, this £2 billion is not 5 million per day added up to 2 billion, right? That's separate.
It's separate. It's separate.
Okay. And
£2 billion is just on the basis of no insurance coverage.
I can't quite square. How does a cyber attack and a no insurance cover cause a $2 billion? We don't know the details yet, right?
I've tried finding out the details, and just if I can add few points, if you don't have the insurance coverage, because auto companies, when you're into production, it's like very critical. So just first one is direct and indirect losses add up very quickly. And second is that lost profits because of production pause, that also you'll have to add. Third is, if JLR has agreements with suppliers or OEMs, any delay or failure may trigger penalties, claims or compensation obligations. So like this, there are so many issues that if you add up everything, they might have come with 2 billion.
I think it's the last one, right? Back-to-back supplies, payments, etc., which also add up. But yeah, and we'll come back and revisit this exactly to answer that question. Which are those heads, right? And how does it add up? But very useful. Thank you very much. An important story to track, important for Tata Motors. So set 6882 is where the stock's finished yesterday. We'll take a break. We're back, and we'll come back with the pre-opening rate. Sudarshan and Mitesh are going to be with us as well. Stay tuned. Okay, welcome back. There's, a minute to go for the pre-open session, and we'll have rates coming up shortly. Well, just want to get you, we're coming to you live from the CNBC-TV18 News studios, and we are, of course, running up to market open as well. This is important information. The Cabinet has approved the shipping and maritime projects worth about 70,000 crore rupees yesterday. This includes financial assistance and a development scheme for shipbuilding worth nearly 45,000 crores. The government's also cleared a maritime development fund worth about 25,000 crore rupees. CNBC-TV18 spoke with the shipping secretary to understand how this will sort of play out in terms of India's shipping sector amidst global headwinds. Here is what he had to tell us.
Shipbuilding Financial Assistance Scheme builds upon an earlier scheme, which was the first version of the scheme. And the idea is to provide assistance to shipyards to bridge the gap between the cost of acquiring a ship abroad versus acquiring it in India. So this difference was about 15 to 20%. So this scheme incentivizes the cost of acquiring a ship, and it gives you a subsidy of 15 to 25% depending on how big the ship is and whether it is a green vessel and so on. Some of the largest ship builders in India are either in the defense sector or in the sole one is the CSL in the under the shipping ministry. The net result of having only a few shipyards in the public sector and a couple of them, in the private sector like in Pipavav or L&T or Shaugule, etc. But the thing is, we don't have capacity. Other countries, Korea and Japan and China, even Vietnam, they produce a lot more of tonnage every year. So this scheme was brought in, one, to improve the capacity of the brownfield shipyards so that they can, they get about 25% subsidy. The cost of capital cost of setting up new infrastructure in a brownfield shipyard, up to 25% we will give them.
Well, we'll play out excerpts of this interview through the course of the day. And that's the shipping secretary for you. Deepan is with us. Deepan, any stocks you like here in the shipping sector?
No, Prashant, I think that largely the shipbuilding industry is concentrated with the PSUs, and they've all been pretty well discovered, like of Mazgaon, Cochin Shipyard, Garden Reach. And that's more of a defense play than actual shipbuilding. There's only one, I think, private company which is listed. I think operations yet to start is Swan Defense, which was earlier Reliance Naval, I think. So with that also the revenues are not yet coming through. So I'm sure it's positive for that particular company. But on the whole, I think it's very good policy by the government. But large beneficiaries will be the PSU defense shipbuilding companies, which may now diversify into commercial shipbuilding as well, I think. So generally positive and in line with all the reforms taking place in the country.
Okay, all right. Deepan, I wanted to ask you about Polycab. From the time it's listed, I think the market cap was around 8,000 crore rupees. The promoter holding at that point of time was around 68%. Now the promoter holding post this likely sale, which sources indicate that it could be the promoter entity, could be down to around 61.5%. The wealth has gone up from around an 8,000 crore market capitalization to around 1.1 lakh crore market capitalization. What's your view? How would you approach the stock? One way of looking at it is promoter selling. The other way of looking at it is they've created so much of wealth. They've grown the company to such an extent. So maybe taking a piece of the pie is okay. Your view?
Well, I'll tell you one thing, Nigel, that even promoters are astonished at the valuations at which their companies are trading. And it is just too tempting that they should at least sell part of the holdings and encash it. But that's not a problem because whatever they sell is going to come back into the market directly, indirectly. A lot of family offices, mind you, are sitting on a huge amount of cash. They find the valuations uncomfortable, so they're not buying as of now. But whenever there's a correction, I think you will see a wave of money coming in from family offices, especially promoters who have sold stock in the last 2-3 years because of very high valuation. And I think Polycab remains a very strong performer. From time to time, we have seen the numbers coming through exceptionally well. And also the fact that, the entire infrastructure, real estate, capex cycle is improving. And that benefits companies like Polycab, especially Polycab is very strong on the retail side with their brand. So positive on the company, just valuations a bit on the higher side.
Okay. All right. Deepan got that. Thank you very much for joining in. Great conversation as always. You have a good day and we'll connect again soon. Just about 9:05. The pre-open is indicating a 60-point lower start. So a little more than what the implied open was suggesting and the gift nifty was suggesting. Weakness in some of the large tech names, Infosys, etc. are still down, and the large financial names, ICICI Bank, Bajaj Finance, I can see some of these on the screen. So financials and tech, maybe a quiet start. Good time to bring up our technical experts for some ideas. Sudarshan Sukhani is with us, as well as Mitesh Thakkar. Gentlemen, good morning. Great to have you both in. So now we've gotten into a consolidation phase again in the market, last 2-3 sessions at least. So Mitesh, what would be your approach for the day?
Good morning, sir. Yesterday I mentioned that trading below 25,150 was a slight negative, and while the broader trend still isn't showing signs of a reversal, I think capturing that level is important for the markets to maintain some kind of an upward buoyancy. So I think till that happens, I think we are quite on the index, but on stock-specific basis we are trading. In case you get past 25,150, I look at 25,500. But if it doesn't happen, then I think we might be in for a bit more pullback to the gap level of around 24,920.
Okay, got that. What about you, Sudarshan? How would you approach the markets? We've pulled back a little bit. Do you think that 20 DMA holds out? Your view?
Yeah, good morning. My view is that this market is not tradable. This was the view I said on Tuesday morning, and yesterday, Wednesday morning, and today, Thursday morning. The markets are choppy. Choppy markets are very difficult to trade and almost always end up in losses. Now, let the choppiness end. The market will give us a direction sooner or later, but we can't force it. So the best trade for the last 2 days and for today is not to trade the Nifty. Focus on whatever stocks you can.
And Sudarshan, which stocks would those be then? Let's come to your list.
Yeah, that's fair enough. See, I have two intraday shorts, Wipro, where a short can be made with a stop above 247, and DLF, where a short trade can be made with a stop under 746. Two buying ideas, CanBank, stop under 120, buy CanBank, and buy ONGC with a stop under 234. It's a mixed bag and the markets are going to be choppy.
Okay, got that point. Mitesh, what about you? Stocks for the day?
I also have a mix of buy and sell, slightly more biased towards the buy side. I think Power Grid was one stock which gave a good breakout yesterday. So buy here at the stop below 289 for a target of around 305. Similarly, LIC Housing Finance has given a pullback in the last 4 days, trading near the support area. So the call is to buy around 577, 576 with a stop below 569 for a target of around 595 to about 600. Also a buy on GRSE Shipbuilders. Actually, one thing, the stock is a part of our portfolio, so disclaimer, there is vested interest. But it's managed to get past the critical resistance levels of around 26.7580. So keep a stop below 26.60 here. Look for targets of 28.30. And one sell call, that's IDFC First Bank. Keep a stop at 71.25 and look for downside targets of around 67.5.
Okay, all right, gentlemen, got that. Thank you very much for your trading advice this morning. Let's quickly shift focus to the real estate pack. Yesterday, we saw a fair amount of selling pressure on realty stocks across the board, Mumbai, non-Mumbai, all over. We have Sumit Kumar, who tracks the sector at JM Financial Institutional Equities, now joining in. Sumit, thanks very much for being here. We'll get to your overall sector view in just a bit, but on yesterday's selling, is there anything particular that perhaps could have been the trigger, or do you think it was just one of those routine market profit-taking days?
Yeah, I don't think so. We should read, too much into a single-day performance of all these stocks. I think in terms of demand, Obviously, first half of the financial year is a seasonally weak quarter with Shad and non-auspicious days. Quite a few of them are there in this period. So the developers also hold back on the launches. Obviously, there's been the impact of rainfall, etc. All of that, the footfalls at the sales offices have been down. So this is just a short-term impact, which is probably a sort of a manifestation of what's happening externally. There is a good launch pipeline for all the tier 1 developers, the reputed developers, the listed developers. All of that is being bunched up in the second half, and the absorption at launches has still been healthy. Obviously, we've not seen many sellouts, as that has been the case in the last 2 or 3 years. But yeah, the absorption still at about 50% of the inventory that is put up for sale. And we hope that second half will actually be quite good, for our coverage universe at least.
Okay, yeah, I think some of the stocks that you like a lot, we'll just put up the list for our viewers as well. I think it's Godrej Properties, Sobha and Keystone, from what I have. So you like them. Do tell us why you've picked out these three, and also address, concerns in some parts of the market. At least I've been hearing and reading about this, that the super luxury end of the market, that seems to be plateauing now.
See, I would say it's more of a consolidation phase. Obviously, we've seen good growth from a period of FY22 onwards till even till FY25, the sector grew at about 25% plus. So obviously, there will be certain periods where the industry or the segment will consolidate. Obviously, a lot of it is linked to the wealth creation in the economy, the stock market, the up rounds of startups. All of that is linked to wealth creation in the broader economy, and that helps bring some momentum in residential sales as well. But even if you look at ignoring, the last 6-7 months where we've probably have some sort of a time correction in prices, as well as the volumes have been a little muted. The last 3 years growth has been quite impressive. In the luxury segment, it's upwards of 25% plus, as I told you. And there will be some periods where, you will have muted numbers, but overall the trend seems to be positive. Supply still is at about 12-14 months across all markets, especially in the luxury and the...
Okay. Got your point, Sumit. So you're not in the camp that is getting a little worried about super premium luxury. Let's come to your stock picks, Godrej, Sobha and Keystone. Why these over some of the others?
A little slowdown in volumes. There will always be some bottom-up stories. Keystone has been very aggressive in business development. They've added quite a few big redevelopment projects. GTP Nagar in China is one, and we see that all coming into the P&L and the in the balance sheet. And there is a decent upside to that name, we believe. Sobha has a good pipeline of launches for H2 this year, and we hope and we believe that they'll do about 30 to 35% growth in pre-sales, and hence the valuations are up for a re-rating. And GPL, the powerhouse of Indian real estate, they have a good launch pipeline, including some large projects in Mumbai and Navi Mumbai, and they are on track to complete or achieve their FY26 target, which is about 32.5 thousand crores. And I think the stock has taken a beating, but there is again a case of a re-rating, and I think it can easily move up maybe 15-20% over a period of time. Yeah.
Okay, got that. Sumit, very quickly, last point, data centers. And we've been speaking to several developers. We spoke with Lodha yesterday, Prestige, I think last week. And most of them are talking about getting into this data center business and opportunity. But how have you started valuing it? And these would be, from a real estate perspective, these would be just, centers. I don't think real estate developers themselves are getting into the tech of the data center. But what is your read-through? And from an earnings perspective, how much does it add? From a margin perspective, is it going to be margin accretive?
So I think I would look at it more from a sort of a annuity business, because I don't think so. Most of the developers are looking to set up racks and the associated infrastructure that we think of a data center, they will be probably providing the real estate part of it. So I would look at it more like an annuity business where, the yields would be somewhere between 9.5% to 10% to start. This is on cost. And overall, I think the return expectations would be on a levered basis somewhere between 18 to 25%. So it's more like an annuity business. Obviously, this is one tailwind that almost everybody associated with this segment is looking to tap. And there is obviously from a small scale, this can grow to a sizable amount. But at this point of time, except for a few REITs, I don't think so many developers, except for maybe a few, have tie-ups with either institutional players or they have their own businesses to talk about. But yeah, it's an emerging sector, and from a small base can grow to a big base. Yeah,
9 to 10% sort of yield and a bit of an annuity sort of.
Yeah, it will be more like an annuity because they will be connected to the real estate part of it. I don't think so. The allied infrastructure will be in their scope.
Okay, all right, got it. Thank you very much.
Thank you.
Well, that's real estate in focus. Just a quick recap of things, right? I mean, stocks that we've put out as part of news flow and brokerage calls, etc. Tata Motors should come up. I don't think we have time for this. We will come back. Tata Motors, Polycab, Glenmark, Lupin Ipca, Dalmia Bharat, Birla Corp, etc. So a bunch of this will react as markets open. What do we have? 25,025 is where the Nifty is at. It's unchanged, nothing at all. The Nifty Bank got slightly lower, 0.14%, 55,033. Nifty Bank, the mid-cap index is in the green, but barely so. 1:1 out of the gates as far as advanced decline is concerned. Small-cap index is absolutely unchanged as well. So 18,060 is where the Nifty small-cap index is now trading at. So this is a very, very quiet Thursday morning start. Nifty heat map comes up on your screen. It's absolutely evenly balanced. Some 2022 names are higher and the rest are lower to begin this morning. 40 points lower on the Nifty at about 25,000 levels. Surabhi.
I just want to point out before I get to the Nifty stocks, one stock, PB Fintech, it's starting lower once again. Remember, yesterday was down 4% after Yash, put out the story around the possibility or some discussions at least beginning about capping insurance commissions. PB fell 4% yesterday, now 1%, 1.2% lower this morning. So let's keep that on our radar as well. On the large cap screen, 47 to 50, actually 50 points down on the Nifty. Tata Motors, and Suresh explained that very well to us. It's a huge hit. Over 2 billion pounds is what we're talking about here because of that cyber issue, 2% lower on the stock. The other weak names include actually Maruti Suzuki, Hero Moto, Bajaj Auto. So all of auto is cooling off. Profit taking is the order of the morning at least. Titan, Eternal, these are some of the other names from the consumer side that are weak. Reliance is not helping the bulls case this morning. It's down about 0.4% at this juncture. And there's some selling in insurance names like Bajaj Finance, HDFC Life, SBI Life. So some of these non-banks are also down. On the upside, however, you've got Hindalco up 1%. Bharti Airtel up 0.7%. And the FMCG plays, Nestle and Lever are having a decent session today. Even Tata Consumer actually. So small gains over there. But all put together, little change. 25 lower on the Nifty now. Nigel.
Well, that's right. The Polycab, there was a large trade out there. That got executed in the pre-open. And in fact, the large trade actually was almost double its size. But yet the stock has recovered from the day's low. It's more or less flattish as we speak. So just keep an eye out on that name. Another one that's doing very, very well is Finiotex Chemicals. I'm looking at the BSE exchange. They are saying that, in fact, they will be considering an interim dividend, share split, bonus on the 27th of September. That's when they have their board meeting. So that stock, in fact, is running away. Finiotex Chemicals, that's a stock, yes, now up close to around 15%. So massive up move is what we're seeing on that name. Zuari Industries, well, that one this week itself is up close to around 35%. It's not a name we talk about very, very often. But for today's trading session, it's one of the top traded stocks. So that's why it's up close to around 6%. Adani Power saw some profit taking yesterday. Today it's resumed its winning ways. Hindustan Copper, that's the only pure play on copper price moves. And as Manisha told us, there's a bit of a supply issue. Demand as well has been steadily increasing. So that one continues to build on to gains, up close to around 2% or thereabouts. Neogen, some positive news flow that did come in on that stock. So that's why that one is up and about in today's trading session. What else has come for some profit taking? Edelweiss Financial. Well, that's one stock that's falling on rather decent volumes. So just pointing that one out. All in all, I think it's a fairly decent start to trade. You have Quality Power. That's another stock actually that's seeing a good amount of up move. Positive news flow came in overnight. That stock is well up, close to around 5% as we speak. Prashant.
Okay, no, absolutely. And, 20 points lower is what the Nifty is now trading with. 20-point cut, 10 points. Nothing very much. It's flattish, so to speak. Adani Power is the top volume-led gainer right now on the NSE. So Adani Power had this rocket-like move. And it basically went from 120 to 170, 180 in 3 days. From 180, highs of 183 basically, yesterday it sold off in 2 sessions to 140. And now at about 150 or so. So huge volumes on Adani Power. Actually, the entire Adani Group stocks had a very large move after that SEBI clean shit. And then, of course, they all corrected over the last 2 days. So we'll keep an eye on the others as well. Hind Copper, Nigel mentioned, Garden Reach is up 2%, Zuari is up 8%. Zuari's got very heavy volumes. Cochin Shipyard is coming up with about a 1.25% cut. There is what else? Hindalco up 2%, copper prices are higher. KPI Green is another one. Market breadth is closing. The gap was, but this is, of course, very, very early in the session. But 1,200 lower and about 1,000 stocks are higher. At this stage. Tata Investment Corp has been another one of those rockets. So from 7,300 in 2 days flat to about 9,000 bucks. And today it's just pulling back a little bit, not very much, 3.5 odd percent. It's all relative to, of course, the size of the moves which have been very large. Okay, Pankaj Murarka is with us, CEO and CIO at Renaissance Investment Managers. Pankaj, great to have you with us here. Thank you very much for your time. Individual names, Pankaj, I mean, you got to be in them. Otherwise, you just see them shooting up like rockets all around you. and so many of these, right? You just sometimes, and as someone was lamenting, everything that I don't have keeps going up. I think. How are you looking at things, Pankaj? We had a nice up move and a bit of a pullback now. What's the view?
Morning, Prashant. Prashant, I think as far as markets are concerned, meaning our views, while primarily we still remain, the underlying trends still remain bullish. So we are very much in a bull market. But I think we think probably over the next couple of years, the gains from markets will be far more moderate than what we've seen in the last 3-4 years. The fact is that we are in the 6th year of bull market in the most expensive equity market in the world. And more importantly, we are now coming out of 6 quarters of earnings slowdown. The good thing is that probably earnings have troughed and probably starting this quarter, this quarter could be a bit slow again because of that slowdown in sales and retail, which happened in the month of September, for the first 3 weeks of September. But I think markets will be looking forward to the next quarter, the 3rd quarter earnings, where the spillover effect will be visible. So probably the good thing is we'll start seeing earnings acceleration now after 6 quarters of slowdown. Yet I think, while the index, what we've really seen, if you see over the last 4 quarters, is while index have held steady, but the broader market is where there's been a lot of action. And as you were rightly saying, there are a lot of stocks with action. But I think that's also partly a reflection of the pockets of market where we see a lot of fraud. So I think investors should be very careful in terms of what they're buying into and probably take a slightly more medium-term view.
Okay. But you are saying that earnings should pick up after several, dull quarters, and that's good to hear. Pankaj, good morning. Surabhi here. So the question really is that, what next? Because while the index has remained flat, individual stocks have done really well. Even the large cap ones, for instance, auto. Now, on the whole consumer piece, do you think this is going to be a durable move that will last? And if yes, in what part of it? Should one be in the auto space? Do you think that QSRs or other formats of discretionary consumption, or maybe even, regular staples, it'll be their time in the coming few months?
Morning, Surbi. I've been saying this for a while, and now there is even more credible data points to suggest that I think we're in for a very healthy consumption recovery in the economy over the next 4 to 6 quarters. We're coming out of a very sharp slowdown in consumption over the last 8 quarters. I think what the government has done in terms of the combination of monetary and fiscal stimulus that's been injected into the economy, on an aggregate basis, that adds up to about something like about $50 billion across tax cuts, 100 basis points of rate cuts from RBI, and now there's GST cuts. That's close to like 1% of GDP. So I think that's a very meaningful stimulus that's been injected into the economy. Consumption recovery, we've seen from past cycles, when they happen after such a prolonged slowdown, it takes a while. So while there'll be an initial burst or frenzy of the pent-up demand, because some of those discounts and lower prices will tempt marginal buyers. But more importantly, I think we'll see a more sustainable recovery in consumption over the next 4 to 6 quarters. And I certainly think so. One should be invested into consumers. We maintain an overweight stance on consumer stocks after almost a gap of almost 6 years, where I'm finding valuations are more reasonable in consumer stocks across both staples and discretionary. And we are looking for acceleration in earnings growth. And I think so is the case with autos as well, because you look at some of the data points in autos, the two-wheeler sales today are lower than what they were in 2019. Or passenger vehicle sales, especially small car sales today, are the same as they were in 2019. So it's been about 5 or 6 years of anemic volume growth that the sector is coming out of, which effectively means there is a lot of pent-up demand that exists in the system. And now with this stimulus, I think that will act as a very strong driver for growth in this sector. So I think consumption across both staples, discretionary and auto remains one of our preferred bets.
Okay. Hi, Pankaj. Good to see you. When I wanted to ask you about the public sector banks. I was reading a Motilal Oswal note. They have pointed out the market cap has jumped nearly 5x in the last 5 years. Yet they're trading at reasonable valuations. The ROEs remain at around 18% or ROAs at around 1%. And now they're pointing out that public sector banks, they could outpace private sector growth, loan growth, for the first time in nearly 15 years. What's your view on the PSU banking names? The reason I ask you this is, just in the recent past, we have seen actually some bit of outperformance coming back into play after going through a period of underperformance. So what's your take?
Well, Nigel, PSU banks have come a long way in the last 7 years from where we had seen in 2018. These banks had huge losses because of bad loans and all of that. And government went through one round of consolidation in PSU banks. And from there, obviously, profitability has improved. But I would still say, if you look at it on an operating basis, barring SBI, the operating metrics for most of the PSU banks are inferior or somewhat lower than private sector banks. So as far as quality in terms of ROA or capital efficiencies are concerned, private sector banks are much better than state-owned banks. Obviously, valuations, if you look across the board, in case of state-owned banks, are much cheaper at points, depending on the bank you're looking at, somewhere between 0.6 to 0.9 times price to book. Most of these banks are trading on a 1 year forward basis below book value. So I think there's been some noise around government looking at one more round of consolidation among state-owned banks and government allowing higher voting rights for foreign shareholders and a higher increase in the voting cap of 20%. I think eventually, if the economy is to grow, and given the fact that state-owned banks are still almost like about 60% of loan market share, in the industry, these banks will need capital. Government in the past 6-7 years has given them enough capital, but government will have to, allow these banks to raise more capital in that sense and allow the restrictions, lift the cap on foreign holdings. So in valuations are reasonable, but I still think there's some more work that these banks need to do to improve their operating metrics. So I think there could be a valuation catch-up trade. And if at all the government goes ahead with, whenever we finally see the execution of IDBI divestment, because that's in the works for almost like 6 or 7 years, and probably there's another round of consolidation, I think that can help to improve valuations in state-owned banks.
Yeah, you've been a fan of PSU banks. Remember SBI was a top idea, right? Pankaj?
Yeah, so our preference still, Prashant, is for private sector banks. Within PSU banks, the one we own is State Bank of India, because we essentially like the franchise because it's a very strong brand, very strong franchise. And in terms of most of operating metrics and capital efficiencies, be it ROA, ROE, or asset quality, State Bank actually is, almost at par with most of the leading private sector banks. So despite being a state-owned or government ownership, it's one of the best-in-class banks that exist in India.
Give us one or two ideas, Pankaj. Something looking interesting, away from the large cap, well-discussed names, where you think there is value.
Okay.
With full disclosure, please consult your advisor before investing. But yeah, go on.
Yeah, absolutely. All the disclosures apply. But I think we should not be hunting for value in this market. As I said, in the 6th year of a ferocious bull market, in the most expensive equity market in the world, obviously there's no value on the table. Stocks and markets are priced to perfection. But the good thing in India is, given India's secular and sustainable growth story, you can find a lot of growth stocks where you make money out of future growth, and buying them, I will not say at value, but at a reasonable price. So let me share a couple of ideas which I find interesting at this point of time. I'll give you a context. One, I am very positive on discretionary consumption coming back, as I said, because we're coming out of 8 quarters of very sharp slowdown in consumption. So just think about it. We have about 50 million people who invest in stock markets or trade in stock markets. And the organized pizza industry just has about 10 million customers. So Jubilant Foods is a company that we own in the space. They dominate 70% of the organized pizza market. I think that space can really expand significantly. I would like to believe that everyone who's trading or investing in stock markets can at least afford to have one pizza, a quarter or something like that. And if that be the case, that the TAM for that space can expand very significantly. So that's one we like on the discretionary consumption side. Apart from that, we like this the whole internet space I've been talking about for a while, because I think the growth visibility there, sustainability of growth, high growth for a long term looks, very much possible in those sectors. So we like the food delivery sector. We own companies like Swiggy and Paytm there, and I think these companies can sustain, growth which is north of 20%. For the next 5-7 years. So even while the starting point of buying is not so attractive, but I think the next growth over the next 4 or 5 years will compensate for all of that, and one can still make healthy returns from these names. As I said, all disclosure applies because we have ownership in all of those names I spoke about.
It's interesting you mentioned the pizza company, and you mentioned the Swiggy as well. Actually, I don't know if you think about it, before Swiggy and food delivery became such a phenomenon, right? Maybe that was the inflection point for, in a negative way, for Jubilant, right? Because now you could get Chinese, you could get Indian, you could get whatever you want delivered to your doorstep. Before that, it was Jubilant with their, delivery, and if you don't get the pizza in time, and you get the pizza free, and used to do very well.
Yeah, that's true. But over the last 4 quarters, if you see Jubilant, they've been making a lot of pivots in their business so as to enhance the TAM. They've introduced, I don't know if you are a consumer, but if you're not, you should try their what they call the square pizza that they've launched, which is a much bigger pizza, and they've added more value to the meals and had multiple other offerings, kind of a thing. So which is really leading to very strong growth that we've seen in the last 3 quarters. And this is happening in an environment where consumption spending has been slow. So when consumption picks up, I think they should be a beneficiary of all the investments that they've made in the business over the last 4 quarters.
And valuations are okay here?
Valuations are rich across the board, Prashant. If you want to buy a high growth, high quality franchise, there is nothing that is available cheap in this market. So one should reconcile to the fact that we'll end up buying some of these stocks probably expensive, but the future growth will compensate for that.
Yeah, okay. Buy pay up for growth. That's been the mantra here. Thanks very much, Pankaj. Really appreciate your time, and good chatting with you. And of course, all disclosures, once again, as you said, Swiggy, I think there was Jubilant, and there was Paytm in terms of single stocks that we spoke about. Markets are up about 15 points, and the market breadth has swung to the other side. About 1,400 stocks are higher, and about 1,150 stocks are lower. at this stage. So lots of stocks into the mix, and I'll sort of cover them in just a bit from now. But I think we have our first management post-market open with us. Surabhi.
Absolutely, and it's management from a very hot sector that's in the news, and I'm talking about IT services. Well, this morning we have the management of Happiest Minds joining in. Venkatraman Narayanan, Managing Director at Happiest Minds Technologies, is with us. Venkat, thank you so much for taking out the time. As you can imagine, we have many questions. I just want to lay out sort of a broad framework for our viewers to outline what we really want to discuss. Obviously, we'll talk about this whole US H-1B visa issue, the impact, not much on this company. They don't send too many workers on these visas to the US as of now, but we'll find out what it really means. And then, of course, we'll discuss demand trends in the second quarter and the rest of the year. And, of course, the outlook on Gen AI. Happiest Minds has a dedicated unit. We'll find out what's happening. So, Venkat, thanks so much for joining in once again. Let's start with the first one, H-1B. Now, our colleague Rima was explaining to us that you folks, a large part of your model is built offshore. You don't send too many people to the US. I think only 3-4 people, on these H-1B visas. So while this is not big for you right now, I'm sure you would have been having a lot of discussions around this because you have your own aspirations of touching $1 billion in revenue over the next couple of years. So is this going to be a big dampener eventually for you and overall for the sector?
So first, to clarify, I think you got the numbers right. We don't send too many people on H1. We've got about 4 people last year and 3 people up until today for this current financial year. So as that shows, we are not very dependent on H1s going from here to US. For our requirements, we do local hiring. And, we had acquired a couple of companies. They have also brought in the talent that we have been looking to, add on site as required. As far as you said about our aspirations, there is going to be both an organic growth, which means we'll continue to do a lot more in the same model or a similar model that we are doing of substantial offshore business. But we'll also be growing in geographies of other than US, because H-1B is kind of a small dampener for the industry as far as US is concerned. But, you have to spread yourself across the geographies. The last couple of acquisitions that we did has taken us to countries like Africa, Europe, and even Asia Pacific. So that's one thing which will help us broad base our revenues. Sure. On top of that, we'll also grow through acquisitions, on-site companies, companies based out of US. Those will all be the ways we'll tackle the growth objectives while also, being able to surmount this temporary H-1B visa hike for the industry.
Got it. So, Venkatraman, you have your plan in place, but if I could ask a broader question, I'm sure these conversations would have already happened over the last 4-5 days since this news broke. Just to understand, at this juncture, the cost of getting that work done on site with a local hire versus sending someone on an H-1B visa with this higher 100,000 fee, what is the offset? And do you think companies will still take the hit and still keep sending Indian personnel over there?
See, you'll have to look at the expertise and the economics put together. Until now, expertise was, paramount. Economics was always there because, you were moving people from India to US. But as you go forward, you'll have to look at both of them. And, typically in a large project with, let's say, 100 people offshore, you may need 1 or 2 people on site. So there could be an element of investment that, both sides, the customer and we'll have to make sure that on-site presence, if required, we'll be able to, send that those kind of people who can then be the connect between us and the customers, offshore connect or the on-site connect that we call, could be that person. So obviously, economics and expertise will go hand in hand. And in those cases where we have to make those investments, we'll make those investments, because I think it's an investment in the customer, in a technology offering, in our offerings rather, and in a particular technology. We look at it holistically. So it's not like I don't want to use the word body shopping, but we don't get into that kind of a business on an H-1B. It's always been expertise based for us.
Okay, so good to speak with you, and as always, Prashant here, Mr. Narayan. So, one is H1B, the other issue, the other point is Gen AI, and I think you would have expected that question. So, use cases are rising. I spoke with Jamie Dimon, a CEO of JP Morgan. He said, well, within JP Morgan, there are now some 500 use cases. Last night, Mr. Vinod Khosla was interviewed by an Indian founder who said that because of Gen AI, and maybe a little dramatic on his part, he said that most companies can be run with 50% of people. They just don't know how to do it. For a company like you, and you've said that you are also advancing use cases and how this will really fit in. What are the billable use cases right now? How many are there? At what rate is this growing? Just give us a sense.
Yeah, like we said, we started with almost close to 200 plus use cases, and that's growing by the day. And when we are in touch with customers, because when we started the unit, it had to be kind of a show and tell. You had to have use cases to go talk, make the customers see the importance of AI and how it could make things easy for them. But moving from there, right now with the unit, or the GBS unit that we talked about has broken even last quarter, which was something that I did touch upon. And that's been only because there has been tangible evidence of what we are doing for our customers through use of Gen AI services. But like you said, there is a lot of research happening on how can you use this to automate. So there is the low-hanging fruit, which is use it for customer support, call center activity, automation of certain basic research activities, repeatable functions. What earlier used to be done through automation can be done through Gen AI. So there is a lot of these things which are the low-hanging fruit, which is getting addressed very quickly. On the supply side, when I say all of this is on the demand side, but on the supply side, we are also seeing, coding using Gen AI. So something that we are tracking very closely is how many of our people are now Gen AI trained, how many of them are using the various tools that are available in the market today to make their coding that much more efficient. We are looking at that coding efficiency improving substantially, and to a certain extent, what earlier used to require 10 people to do in terms of coding, we would now require, let's say, 8 or 9 or 7 kind of people to do the same kind of work. So there is a lot of generative AI being used at the coding end. Today, you must have read there is a company which is in the area of vibe coding, which has got quite a bit of decent funding. That's about how you're able to automate our own internal tasks, which we use to deliver services to a market. So to our customers. So there is a demand side and the supply side. On the supply side, we are looking inwards, working very closely with customers. There is a task force which is going into each of the projects and seeing what part of the work that we do for them.
But Mr. Narayanan, this would be all services, you're not building products for this.
No.
I mean, for example, I'll give you there's a company called Cursor. I heard about it recently, but I'm sure you're aware of it. About 18, 20 months old, $10 billion valuation. And it just enables people to code using ChatGPT as the underlying platform. It basically sits between ChatGPT and the coder. Apparently, I was told 80% of software engineers who write code in India use it. I'm saying, but you will be looking at services, not building products like that.
We will be using companies like Cursor.ai or Vibe kind of companies which are using those platforms to use and automate our coding experience for our customers, Prashant. That's the way we'll go forward. On top of that, yes, these companies will also become part of our high-tech customer landscape, because they will also want all of it cannot be automated. It's not that you just tell the machine, build me a product called Cursor AI. They are also going to be our customers tomorrow. And they'll also be we'll use our own technologies to help them build this platform kind of a thing. So yeah, there is demand in the form of existing enterprises adopting or adapting to AI. There are new emerging companies completely in the field of AI. All of whom we'll be supporting.
Okay. Got that. That's, of course, medium-term perspective and helpful. But Venkatraman, just to come back to the near term, I mean, earlier in this year, you have been guiding for double-digit growth, right? Yeah, double-digit constant currency growth. What are US clients saying right now, particularly in that geography, given the up and down and the uncertainties? I mean, how are spends shaping up, decision-making? How is all that shaping up? And are you on track with that guidance of double-digit constant currency revenue growth and margins, I think, in the band of 20 to 22%?
We are holding on to both those numbers as now. I don't want to get into specifics because we are just going to get into the silent period for Q2. As far as margins are concerned, again, I'd cautioned that there will be slight adjustments for the wage hike that we'll be going through. We have gone through in the current quarter. But other than that, we are holding to those numbers. As far as US as a geography, I would have loved for my colleague and CEO, Joseph, to give you a first-hand view because he's there, traveling extensively, speaking to customers. Things are slowly opening up and the entire industry is looking for a better second half. That's how the story right now is, because there is going to be a little bit more of, fixity on the way things are moving in the US economy. Obviously, this H-1B thing is a little bit of it just does set some sort of a disturbance, but, we should be able to quickly overcome that and get on to talking about business. But that said, we are looking at a very healthy pipeline. It's been building up. We had put in place our new business head and the whole organizational restructure that we did. We are looking at those starting to pay dividends, and we are seeing a good pipeline build for, second half and onwards.
Yeah, but what you said is really important to wrap this up. This whole H-1B issue, is it going to lead to delays in deal closures? Because now when a US client is looking to sign on an Indian IT services company, I mean, onshore, offsite, that whole mix, visa costs, like you said, I mean, whether the client will chip in, etc., all those negotiations come in the picture as well. So does it mean, as opposed to the expectations of a strong second half, does it actually mean potential delays in closures?
I don't think so, because we are talking about all of these new changes happening from the next filing season, which starts next March. So right now, discussions will be based on people that we have with us today. Most of the companies do certain amount of advanced filing, and they have a few set of people already available who can be, deployed immediately or put into the project immediately. Local hiring is something that we have been focusing on. That's something that we'll dip into quickly. So I think in terms of ramping up, the challenges will be almost similar, whether it is on-site or offshore. That's what it'll be.
Okay. All right. Great to have you on, and it's good perspective for us, for your shareholders, and of course the viewers as well. Thank you very much for taking out the time today. Good luck for the rest of the year. Well, that's a view from Happiest Minds. We'll take a quick break. On the other side, we continue with our management conversations. We'll be putting the spotlight on Adani Wilmar and talk about the company's new MOU to set up the National Mustard Model Farm Initiative.
Welcome back. Well, the markets are down mildly, down close to around 20 points or thereabouts. Nothing really to talk about on that front. But a couple of stocks actually are moving up. You have Inox Green. That's bucked the trend, moved to the high point of the day. And you have Max India. That's another stock that's up close to around 8.5%. Maharashtra Seamless, winning an order finally, 250 crores. The street has been a little bit worried. Order book has been dry, but 250 crore order book, order bin, street will like that as well. Let's move on then. We have Anshu Malik, the Managing Director and CEO at Adani Wilmar, who joins us on the show. Hi, Mr. Malik. Thanks a lot for joining in. Well, we've got a few queries for you. But before that, let's just highlight the big talking points that we're going to be looking at from this conversation. Synergies from GST rate rationalization. What's the outlook on edible oil pricing as well as on margin? And the MOU to lead National Mustard Mission, what's the benefit on that front? Well, sir, thanks for joining in. Let's talk about GST 2.0. Do you expect volumes to improve in the second half of the year because of GST rationalization, given the much talked about boost for consumption? And in that sort of a backdrop, do you think you'll increase your volume growth guidance that you had given early of around 7 to around 9%? Please go ahead, sir.
I think the reduction in GST has been the most best decision, I think, which has happened from the consumer's point of view. And particularly food, packed food, cosmetics, personal care, everything has now come under the 5%, which is very, very reasonable. This will help not only improve consumption, but it will also help national brands or bigger brands to fight the local competition. That makes it much better for all of us. That is one. Two, overall, the consumption story is very robust now, with very good monsoon and very good kharif production that we estimate, one, and two, lower inflation. All this is going to put a lot of money in the hand of the consumers, and consumption story is very robust. I look forward to a very good second half. From one, marriage season is coming up from 15th November, Diwali and Dussehra October, and all this put together till March, at least I see very good consumption story.
Okay, all right. But will you go ahead, sir, and increase your volume growth guidance of 7 to 9%?
I think in edible oil, we have always said that it will be single digit, but it will be a strong single digit. In foods, we have been growing in double digit, and which we will continue to grow. We are sure about it.
And food and FMCG, I think it was around 10% of your total mix, and you were looking to take it up to high double digits, high teens. Could you confirm that? And by when does that happen?
Yes, we are looking at growing this. We have been growing food business at around 20% last 3 years. This first 3-4 months have been a little slow, but I think again it will start picking up from now onwards. Going forward, we see achieving around 9,000-10,000 crore turnover in food business by exit March 27. That is what we have been planning, and that is how we are working on.
Okay. Sir, just coming to this MOU that you have signed for this, the mustard plan. Can you just tell us how this is going to add to your revenue? What is the investment that you'll be making and over what period of time?
Okay, see, in this collaboration, what we are doing is that we have identifying 3,000 model mustard farm in 9 districts of Rajasthan, Madhya Pradesh and Haryana. These model farms will demonstrate regenerative agriculture practices. We will have climate resilient, climate control monitoring system, satellite-based monitoring system, and soil health. On all of these, we will be working with the farmers. This initiative will bring around 20,000 farmers together, where we will have field demonstrations, we will have field classrooms, and then we will give them digital advisories on how to do best practices for sustainable mustard oil, mustard seed growing. We expect that this practice will help increase 30% almost yield for the small farmers, and that will help in the overall contributing to the national mission on oil and oil seeds that the government of India is doing. This program, we are investing almost 4 crore rupees in 2 years to work closely with the farmers and take this to a bigger scale and showcase this to other farmers that how to grow higher mustard. And I think mustard seed with 40% oil content contributes on a large basis to the edible oil.
No, sir, just trying to get... so that's the model. We understand that. But we're just trying to also assess what is the revenue implication for you. And if you could also, maybe it's in the medium term, maybe it's not year one, maybe it's not in FY26. What is your FY26, revenue estimates or, your growth guidance? And when will this mustard start contributing, and how much will it contribute from a revenue perspective?
See, it's not that when we participate, we look at increasing our own production. We are looking at overall economy, driving economy through higher production and higher yields. And our mission is that can we grow higher mustard seed as the other nations are growing? And can we contribute in any way? By the way, we are the largest mustard seed processors and crushers in the country. And we have the largest mustard oil brand in the country. So our link with the farmers is that when the farmers grows more, we are able to also absorb them and buy them out and help them get better yield and better money. So the overall objective is that the country should start growing more mustard seed. And let me tell you, in the last 6 years, from 85 lakh tons, it has now increased to 115 lakh tons. We see a great opportunity for a country to grow more mustard seed.
Okay, fair point, sir. I mean, beyond mustard, let me just broaden this out. So like you discussed in the opening remarks, there are the GST cuts that have come in. Also, just tell us how the whole year is looking now for your total business overall. What is the volume increase that you are expecting now? And what is the outlook on margins given how input prices are moving?
See, on volumes, as I said, the year should end at single digit in edible oil, double digit in higher double digits in food. Overall turnover will cross 65,000 crores for sure. But when we look at margins, the margins are stable. Edible oil prices are stable, which helps us in ensuring the stable margins. And looking forward, if you look from here, the consumption story is very robust, and if that happens, the margins will improve. Overall, the mood of the consumers are much better, and I look forward to higher consumption coming ahead.
Okay, all right. We'll leave it on that note, sir. Thank you very much for joining in. Good to get that perspective from you, and good luck for the coming quarters as well. Thanks for joining in. Well, that's a perspective from AWL coming through. Let's go back to the market and see what the screen is telling us. Very flat and actually recovery. Recovery from what was a near 50-60 point cut when we started trade. So at least we're at the flat line, but it's still choppy, you'd have to say. Nagaraj Sethi is with us for some technical trading ideas. Nagaraj, thanks very much for joining in. Index, any trades today, Nifty or Bank Nifty?
Hi, good morning. Yes, market has been in a downtrend over the last 4 or 5 sessions, and looking like at the place at the support, the selling momentum seems to be decreasing. Market is nearing a strong support around 24,900 to 25,000 levels, and I'm expecting Nifty to bounce back from the lower levels in the next day or two, and we could see some good amount of bounce back from the lower levels. I think it's an opportunity to accumulate the longer levels for the both Nifty as well as the Bank Nifty.
Okay, all right. Hi, Nagaraj, good to see you in. What about individual stocks? You'll be having a couple of ideas for us.
Yes, I have 2 stocks. First one is Cochin Shipyard. Chartically, Cochin Shipyard, after forming a bottom reversal around 1600 level, has bounced back gradually, and after a small decline recently moved up very well. The overall chart pattern is looking positive, and the volume breakout as well as the positive indication of RSI is indicating a more positive bias for the stock price in the near term. Currently trading around 1940 levels, one can look to buy at this point of time. The upside target would be around 2050 levels, and one can face a stop loss of 1890. Second one is Oil India. Oil India was in a consolidation phase recently, and today it witnessed a sustainable upside breakout of the consolidation and moved higher. Currently trading around 421.85, one can look to buy at this point of time. 445 is going to be the initial target, and one will face a stop loss at 400.
Okay, all right, Nagaraj, got that. Thank you very much for the updates and for all the trading advice. Back to the screen for a quick check. BEL is an interesting mover. It's finding takers this morning. It's a Nifty winner right now, and it's suddenly sort of shot up from being absolutely flat. Yeah, so there you go. morning highs on BEL. Hindalco is continuing its good form, and Apollo Hospitals is finding some traction as well. So beyond the usual, we've gotten so used to seeing only FMCG or auto stocks up. Today we have some new names on the screen.
Well, that's right. Even Oil India, another stock, I think, from the broader markets that's seen a bit of a correction. That's moved to the high point of the day. So I think we should get that stock. Even ONGC, I think, from the day's low has seen a bit of an uptake. So some of these stocks, that have some kind of a crude oil play in it, they have moved a little bit high. Even Vedanta has some bit of crude oil in there. So all of these names doing quite well, particularly in the last few minutes. Finiotex Chemicals was the one that we spoke about earlier. That's up close to 15%, waiting for the outcome of the board meeting where they could consider a lot of issues like bonus and the likes. So that's one of the top movers in terms of volume as well. 15% higher, massive volumes on that name. Vinny joins us, though, to tell about a company that won an order overnight and is doing well today. Newgen Software. Vinny.
Hi, good morning. So yes, Newgen Software is a small cap, mid cap IT company that we're keeping an eye out on. They're growing their international portfolio, and that is why we're seeing the stocks here run up. Now, the company's UK-based wholly owned subsidiary has actually executed a master service agreement with Tata Consultancy Services in Belgium. This deal value is around 4.2 million euros, will provide modernized cloud-based enterprises, records in terms of management of platform, as well as end-to-end customer use services in Belgium. Other than that, they've also got a domestic order, or a small order of 21 crores approximately from Keshma General Insurance. This is for software license implementation as well as annual support services as well. This is for a period of around 5 years. Do not forget that the stock has actually been underperforming its other peers, and in the last 3 months, it's down almost 19-20%. While Nifty IT, when you look at it, in the last 3 months, it was just down 10%. So yes, the move also comes in because it was underperforming, but a good order win on the global front is keeping the stock abuzz as well.
Okay, all right, got it, Vinny. Thank you very much for that. Quickly hopping across to Vamakshi to take a look at Quality Power. This stock has been surging right from the time the market opened, almost 5-6% higher. Tell us about the news, Vamakshi.
Well, Surbhi, the stock is in focus because Hero Electrical, which is a material subsidiary of the company, has signed a technology co-development agreement with Hyosung T&D India. Now, this is for gas insulated switchgear, which is GIS instrument transformers. Now, this development is quite positive for the company, and that is because, number one, it enables the Meru to diversify into the GIS value chain. In addition to that, it also positions Meru as one of the first companies in India to co-develop GIS instrument transformer tech for the global market. So the technology essentially will be provided by Hyosung, while the manufacturing will be taken care of by Quality Power. Now, other than that, what they're also highlighting is that Meru will be able to leverage Hyosung's expertise in eco-friendly gases and compact equipment design, and they will be able to address new demand segments such as metro, rail, offshore wind, data centers, as well as high voltage or urban transmission projects. Now, what they're highlighting is that the development and commercialization of the initial set of transformers will be expected in the next 12 months. Overall, a positive development for Quality Power, and resultantly, the stock is trading higher in the trading session today.
Okay, all right. Thanks a lot for that, Vamakshi. Time to slip into a short break, but on the other side, Manisha Gupta is standing by. She's going to tell us what's going on in the commodity space. You don't want to miss this.
Welcome back. Well, it's time to talk commodities, and we have Manisha in the house to tell us what the latest is. Manisha, yesterday you said the sparkle is moving to platinum. Today morning, what's sparkling?
Copper.
Oh, gosh.
Copper is the new gold is a headline that I've seen in some of those publications today. But absolutely, look at the kind of gains that we've seen in the overnight market. So even as there's a bit of a breather that you're seeing in precious metal prices, it is the base metal prices that you should be looking at right now. So 4% of a gain. We're looking at spot prices trading by 2-month highs, and the 3-month LME, which is traded on a longer term basis, is trading at a 15-month highs right now. now. So very strong gains coming in for this. So the major reason, of course, has been the Freeport McMoran declaring force majeure from its Grasberg mine in Indonesia. There have been some issues that Indonesian mine have been looking at for some time, but this latest incident that happened on 8th of September seems to be ballooning right now, and there are some hazard concerns also coming in from those mines, and is the reason you're looking at prices gaining up. Now, Grasberg mine is important because it is the second largest source of copper in the world. Also, Grasberg accounts for nearly 2 to 3%, rather 3.2% of global mined copper, and much of that clearly comes in from the Freeport mine there. Now, when you look at the overall output from Freeport as a company, 30% of its copper comes in from Indonesia and 70% of its gold also comes in from here. Now, Freeport already has cut guidance in sense of production for this year and the next as well. So when it comes to copper, they have cut their sales guidance by 4% and gold by nearly 6% on the lower side. Interestingly, there have been various other reports coming in as well. McKinsey, for one, says that they're looking at 880,000 tons of supply being affected in 2025, not just because of Freeport, but various other mines as well. And I'll quickly come to that. But first on, when you look at Freeport, they have temporarily halted operations at Grasberg with 30% mine operating at this point in time, is what we understand. Well, that is about Freeport. But then apart from that, copper also seems to be looking at a lot of support coming in, especially from China, where the demand has been resilient. Second, it's not just about Freeport, because take a look at suspensions that we've seen in Chile at that El Teniat mine there, which is extended longer than what the street was anticipating. And whenever it starts, would be happening in on a phased manner there. And then you also have the Hudbay Minerals. They also have shut operations at a mill in Peru because of the political protests there. And then it also has been about the Constance mine. We also are looking at concerns coming in from there as well. So it's not just one, but various areas in the world where you're looking at copper supply getting affected. This is a price chart in sense of copper for last many years. And as you can see, in last 5 years, it was only in 2022 that we saw a 14% decline. All other years have seen stronger gains, and 2025 standing with a tall 21% gains in sense of copper at this point in time.
I mean, remember 2021, right out of the COVID year, right? There was this huge excitement around copper, that copper is...
Energy transition and AI and EVs. And, yeah.
Go berserk. But, you know, as many things in life and markets, it doesn't always play out that way. And very, very useful sort of historical context as well to what's happened there. But 20 points lower on the Nifty, 25,036, 25,035 is where the Nifty is at. So it's very, very quiet. It's been that way from the morning. I'll just quickly outline what's moving with the maximum volume. So Adani Power is the number one pole position, 3.5% price gain. Garden Reach is up 2%. Hindustan Copper is up 4%. Cochin Shipyard is up about 2.5%. And something like a New Gen is up about 5% or so at this stage. By the way, a lot of new stocks into the mix, stuff which was not there in the morning. Inox Green is limit up. Stocks done very well lately. It's up 5% on the day, 206 on this one. On the downside, I mean, I think Tata Motors should be there. Yeah, it's the number one volume-led loser, 2.5% cut. Tata Investment Corp, was talking about this in the morning, went up like a rocket, 5% lower. Aether is down 4.5%. Edelweiss, Astral, and so on and so forth. But volumes much lesser on the downside than they are with stocks which are moving up. So it's a good sign, I guess, in the overall scheme of things. What we'll do is take a quick commercial break here. On the other side is our special segment is the economy. Lata discusses what to expect from the government's second half borrowing calendar with Arup Rakshit of HDFC Bank and Shailendra Jigan of ICICI Bank. There's an interesting chat coming up just after a quick break.